Hello, everyone, and thank you for joining today. We'll just wait for a couple of more minutes, and as we see people joining in, we'll just wait for a couple of more minutes, and then we can start the presentation. Hey, good morning, everyone. Thank you for joining us today. So today, the topic of the webinar is banking the next big thing, right? So we've seen a lot of action in the last few years happening in the space. So I'm just going to give you a brief about what we think about the sector, and then we can open for Q&A. Okay, so let's start by looking at what happened this year globally, right? And of course, as everyone knows, the elephant in the room is the regional bank failures in the US. So I'm going to start by explaining what actually happened. Silicon Valley Bank, if you look at it, was largely a banker for tech startups, right? And during COVID, when money was cheap, these tech companies made huge deposits into Silicon Valley Bank, right? And as we in turn park this money in long dated government bonds, right? So when you buy a bond and the market interest rate rises, the value of your bond falls because newer bonds issued further are issued at a higher rate, right? So when this year the Fed started raising interest rates, the bonds issued during COVID lost a lot of their values. The bonds issued during COVID was the bonds that Silicon Valley Bank invested in, right? And if you have further questions on how this works, we can take this up in the Q&A, right? So please don't hesitate to ask. Um, yeah, and as credit costs again started increasing, the tech companies started withdrawing their capital because they needed money for operations, right? And this led to SVB having a large volume of deposit outflows And this caused a delay in further payment for withdrawal requests, right? And this caused a bank run on SVB and other banks such as Signature Bank, which had large exposures to the crypto market and was facing volatility early this year. So these were primarily cases of neglecting risk management. But if we look at Credit Suisse, on the other hand, it had faced some scandals for a few years, right? And at the point of acquisition, you had cases of capital losses and management shifts, right? And this caused significant losses, and Credit Suisse did suffer significant losses of capital in Archegos and Greensill Capital collapses in 2021, right? Archegos. Yep, sorry about that. Yeah, so Credit Suisse did suffer, uh, a few problems with Archegos Capital, which is a US firm, and Greensill Capital, which is a UK firm, right? Both of these collapsed in 2021, right? And by the summer of 2022, there were a lot of rumors, right, surrounding Credit Suisse's impending failure, right? And this prompted clients to pull out around $120 billion in assets. So in March 2023, Credit Suisse announced that they would borrow up to 54 billion from the Swiss National Bank, right? And a few days after that, SVB failed. And this led to investors pulling out more money. And their largest investor, which is the Saudi National Bank, right, refused to add capital at that point. So UBS, which is the largest bank in Switzerland, eventually took over Credit Suisse for around 3.3 billion, which is a fraction of what their assets are worth. Right. So now that we got the global aspect out of the way, let's look at the domestic aspect. So banks are arguably the most important part of the economy, right? Which can clearly be seen in their involvement in the index, right? 37.5%, right? And as we go through the presentation, you'll see why. Okay. So if you ask anyone in the industry what to explain, the banking sector in one word over the last close to a decade, right? Like 8 years. Many of them will have some version of the other of the word reform, right? So bringing in, reforms in any industry is not an easy task at all. And this is doubly true for large industries, right? And, goes without saying for banking. So the NCLAT and the IBC were introduced to, resolve rampant issues of bad debt plaguing the financial system, right? It was really, really bad when we look at, 2017, 2018, right? Whereas previously the process to resolve claims were, long, convoluted, right? Had a lot of bureaucracy in there. The IBC aimed to fast track. So what did they do? The entire insolvency exercise under the IBC must be completed within 180 days, right? And if the debt resolution does not happen within the stipulated time frame, the company would go into liquidation. And they've also changed the definition of a non-performing asset. And they changed the definition to when a creditor does not receive a due payment, could be interest or could be principal, right? Within 90 days of the due date, the asset now comes under NPA, right? And the reforms also included consolidating the banking system, right? There was a presence of too many banks, right? And this reduced efficiencies and it split up capital as well. So banks were merged to resolve these issues. And a good example of this would be your state banks, right, in the PSU bank space, where all of the state banks were consolidated into one, which is SBI, right? Additionally, there were a lot of capital infusion that happened into the bank's balance sheets, and that shored up all of your banks' capital adequacy, right? So right now, when we look at it, all of your banks stand well capitalized with the lowest level of NPAs in years, right? And we're ready for the next stage of growth as well. So what is different today, right, from what we just discussed? So pretty much everything, right? Whereas other countries have had recent problems, we're seeing the fruits of the efforts that were taken in the last 8 years, right? So your NCLT has boosted efficiency of resolutions, right? NPA numbers are said to be the lowest in a decade at the end of this year, and this is according to CRISIL, right? Your corporate NPAs have come down to below 2%, right? And your corporates have greatly reduced leverage in the last few years, and some of them have even prepaid their obligations, right? So, in addition to bank balance sheets being strong, your corporate balance sheets are in an excellent position as well, right? And this is a twin balance sheet advantage that we have. So, when we look at credit offtake, it's been robust, right? Even amidst increasing interest rates. And the growth in credit has been broad-based, which means across segments, right? It's not only one, aspect of the economy that's borrowing. It's been broad-based. So here are two charts. The left one shows the market cap of the Bank Nifty index, and how it's grown over the last 10 years, right? Your average rate of growth is nearly 16% per annum, right? And with increasing investor confidence, foreign, domestic, retail, right? This index is expected to grow further. And we've already seen a significant jump from FY22 to FY23, right? And the right shows the share of profit between the private and the PSU banks. And here we can really see the efforts of the NCLT start to pay off. So your PSPs were the most affected during the whole NPA cycle, right? And you can clearly see that in the FY18 and the FY19 numbers, where they only had 16% and 22% of the profit share, right? And now we're seeing PSUs increase their value and, strengthening their balance sheet. And we're seeing an increase in profit share as well, right? The most recent being around 31% of the sector's profits. So here are another couple of charts showing the size of the banks and the market cap, right? So your top 5 banks make up nearly 21% of the Nifty, right? And the number for HDFC Bank here is shown post-merger. So it's after, HDFC and HDFC Bank have been merged, right? And in terms of assets, of course, SBI is the largest, right? With around 60 lakh crores in the balance sheet size. And that's bigger than number 2 and 3 combined. So it's bigger than your HDFC Bank and ICICI Bank combined. So what are the risks? As always, we need to keep an eye out for new regulations, not only direct regulations on banks in terms of lending and borrowing, but things that affect banks indirectly, right? Like insurance. All of your industries are cyclical, and so is banking, right? So knowing when to exit and at what valuations to enter is equally as important as actually participating in the theme. Another near-term risk would be the rising cost of credit, and this would have an impact on the bank's margins. But we eventually see this, normalizing, right, as your interest rate cycle plays through. This is a normal aspect of the interest rate cycle, right? Some of our industries are affected by the global deceleration as well, even though India is growing at the fastest pace in the world right now, right? We are seeing some aspects of our industries affected by that. And, an obvious one is IT, right? A majority of their order books do come from the West, right? So it's only natural. And any affected industry would look to borrow less in the near term, right? And this will impact your banks as well. But is there a cause to actually worry about, like another NPA cycle or cyclicality? We don't think so. At this point, your opportunities in like the current scenario far outweigh the risks, right? Your bank balance sheets are great, your corporate balance sheets are great, right? And it's only a matter of time before, credit starts rising again. So here we have the performance for Sphere as of June, right? Sphere holds a large, portion of the investments in the banking space, right? And that's played out really well for us. We hold both private and public sector banks, right? And we've been holding this ever since inception, right? So this has played out really well. And as you can see, the since inception numbers are 10% above our benchmark. And in addition to banks, we also have some exposure to consumers, technology, precious metals, some global assets as well, and some fixed income. So Sphere does work for you, as you saw from the previous slide. So do what investors do and invest. And with this, I'd like to open the floor for Q&A. So if you have any questions, please feel free to post your questions in the chat and I can get to answering your questions. Performance chart, sure, sir. Okay, so we have a question. All of these things are under macroeconomics. How can a layman start to get knowledge in this? Okay, so you'll have to know how cycles work for the most part, right? You'll have to know how cycles work, and that has a little bit of a learning process, and it comes through experience as well. So just you can you can you can get started with understanding basic macroeconomics, right? And then you can start understanding how monetary policy works, and how the banking system works in general, right? That's a good point to start. View on small finance banks such as Equitas. Okay. So for small finance banks, your NPAs have also gone down by quite a bit, right? But at this point, with where valuations are, it's much more advantageous to go towards larger banks, simply because when credit growth starts again, especially when like large entities such as corporates borrow, they tend to go to the larger banks, right? And from that aspect, yes, your large banks are in a better position to grow their asset books. But at the same point, right, the retail credit growth, right? A large portion of that, a large portion of the retail and SME credit growth as well, right, goes through the smaller banks, right? So, I mean, we still have to, like, wait and analyze that a little bit further. But yeah, so it does seem like they're in a better position than they were before, for sure. Are you playing the strategy through Sphere, or can we invest in any other theme? Okay. Um, Mr. Ravi, I'm assuming if that you're asking if we're playing this only through Sphere, or are there any other vehicles through which we can play this? In which case, the answer is yes. We have a mutual fund distribution division, right, where we can do sort of uh, like an STP, where the money goes into the theme over a period of time, right? Because we just want to capture any price volatility that may occur. So yeah, there are various ways within ithought itself where we play the banking thing. On the banking side, where Sphere exists now, um, so the top 3 to 4, or will you look at smaller banks with less market cap? So right now we're investing in the larger banks, right? Some of the names you have mentioned, right? And we're also invested in a bank ETF, right? Um, we'll look at smaller banks with lesser market cap. That would happen as and when we see further green shoots. But yes, we definitely were not chained to any like um, we're not chained to any mandate where we only have to invest in larger companies. We can invest in smaller companies, but right now we're looking at sector leaders only. Will the interest rates continue to rise in the coming days? Okay, so we believe that we're close to the peak, right, of interest rates. We're seeing inflation come under control, right? Um, so we'll probably see like maximum 2 more rate hikes, right, or 1 more. And the RBI has done something very prudent, which is they didn't raise rates in the last meeting, right? So that gives them a little bit of flexibility, right, for when if inflation should run up, right? Could be due to many factors, right? Could be because El Nino that affected rainfall, and food prices are rising, and they have to raise interest rates, right, to combat inflation, right? So they do have a little bit of gunpowder left for that. But we believe that we're near the peak, right? Calling the peak would be a little bit more difficult right now. But yeah, not a lot, not a lot of rate hikes. Okay, how much can we expect the banking sector to grow in the future and the future growth of NBFCs? Yes, sir, we are very positive on the banking sector right now, because there were a lot of structural issues, right, in the 2010s, the late 2010s, right? And most of those have been resolved, right? And again, there is a difference between a structural issue and a cyclical issue, right? Cyclical issue would be your cost of credit, other industries going through downturns, right? Structural issues are when, your actual balance sheet has issues, right? And most of those are resolved, right? So, and we've seen a lot of regulations come in as well, right? To, mitigate the bank's risks and such. So yeah, we are, very positive on the growth of banking, and your NBFCs have also come under a few like regulations. So yeah, we are positive on both your banking and your NBFC space. And NBFCs will grow, especially when retail credit grows, um, your smaller companies grow, and your SMEs as well, right? So when we see all of these aspects play out, right, and when we get back, consumption growth, right, that should happen in a few quarters going forward. So when we see evidence of all of these things happening, you'll see the entire financial system, grow as well. Okay, banking sector has already rallied in 2021. Everything is cyclical. So how can we expect the banking sector to shine again in the short term? Should take in a way that the market is looking for. Okay, yes, the banking sector has rallied quite a bit this year. Um, so from where we look at it, is this is a situation where you should invest money. Like how we're doing it in Sphere is, when like we're investing it in sort of tranches, right? So we have certain price targets, and we add capital as and when they meet their price target. So we don't invest it fully in one go, right? We invest systematically, right? And even in the mutual fund space, that is the approach that we're taking now, right? We're not investing money in the financial services space or in any sector for that matter, right? You're seeing index hit new highs every day, right? So we're investing everything systematically, right? And that's how the money is going. If we see, a bit of volatility in the market, FIIs pulling out money and the index dropping to certain levels where the index or the stocks, right, dropping to certain levels where we are, pretty comfortable investing the lump sum, then yes, we would allocate to space at that point in time. But right now, everything is going, slowly in tranches. Okay, how do we see the current valuations of public and private sector banks at the moment and looking forward for a couple of years? Okay, so valuations are, let's see, so valuations are, um, you know, um, are derived through two things, right? One is the price, right? And the other is earnings or book value, something like that, right? So the price is high, right? And whether that increases, decreases, right? That's a function of the markets. Um, when you look at earnings, right? So let's say your price is X and your earnings are Y, right? When your earnings increase, right, automatically, and the price stays the same, right? So you're looking at an increase in earnings and the price staying the same, automatically your valuations come down, right? And the same goes with your book value, right? So yes, currently, if you see the valuations, they do look higher, but your future prospects of these companies, right, is does look pretty promising, right? So yeah, that's another aspect to look at when you're looking at valuations. But like in a business environment sort of sense, a lot of things seem conducive to business at this point in the banking space, both private and public. They want to understand the profit share calculation method in Vriddhi. Um, Sir, I would request that we take this offline. Um, I can ask one of our investment managers to get on call with you. I believe you would have given your details in the in the registration form. We will use that to get in touch with you, and we will explain the profit share method in Grid. Okay, loan book of almost all the banks skewed towards retail and corporate lending is not picking up. With slowing economy, is this sustainable? Focusing a lot on retail. Okay, so we expect corporate lending to pick up soon, right? And the aspect of slowing economy is more in the global sense than in the local sense, right? Locally, we are growing at one of, if not the fastest in the world, right? For this year and probably next year as well, right? So even if growth slows down, we would still be leading the pack, right? And our corporate balance sheets are really strong right now. And yeah, when we look to, add more capacity and grow more, which we are seeing, incentives for corporates to start the growth cycle, that is when we'll see corporate lending picking up. So yes, we do believe that the loan book will be more well balanced going forward. Okay, so what things are the factors affecting the banking sector? Okay, so today, what we would expect to, affect the banking sector would be something on the regulatory aspect, right? Um, if there are any, new regulations like how we saw for insurance previously, right? So that would affect them. And of course, like cost of credit going high can have an impact on margins in the near term, right? That is another thing. And most of your, plaguing negative effects are resolved, right? With the IBC, with the NCLT, NPAs going down, right? All of those, for the most part, have been resolved, right? So that's why we're seeing green shoots in the space. Okay, how much percent are we exposed to banking in Sphere? Um, Close to 20%, sir, approximately near 20%. Okay, we normally look at price to book for valuing the banks, correct? For Kotak and HDFC, it's always been higher, but at the historical level, it seems lower now. Can we consider these and invest? Or on the other hand, public sector bank books are reformed and the price to book value is way lower than private banks. Also correct. So should we consider these public banks over the private players? How I thought, what are you investing on based on the books alone or the size of the private banks as well? Okay, this is a very good question. Um, so yes, it's true that for Kotak and HDFC Bank, there's always a premium, right? Because they're some of the largest players with the most with um, comparatively, much cleaner books, right? So they've always been valued at, slight premium, right? But so right now, what we would do is that, we would so like for Kotak, the price has moved a little bit higher, right? So right now, what we would do is we would be a little bit more price conscious, right? Yes, they are great companies to invest in, but just be a bit conscious of the price that you're investing in. Um, like if you don't want that near-term volatility, if you don't mind near-term volatility, and you're investing for the long run, then that's something else, right? That's another question to ask, right? For public sector banks, we have been positive on the PSU bank space since 1819, right? We have been investing in the PSU bank space for a long time, right? And yeah, this is how we have, you know, played the PSU bank cycle, right? And we are still positive on the public sector banks. Um, but then again, you are correct. The price has gone, like the price has risen, right? And if you're asking, your other question was, okay, based on the books alone or the size of the private banks as well, we take a lot of different aspects, right? And no, we don't invest only based on the book size. We invest also based on the future prospects, right? So what we thought of like a few years back, right, in like 2020, 2021, we asked ourselves the question, okay, once um, all the bad news is factored out, right? What are the green shoots for the public banks, right? Will they start lending to corporates again? When will we see credit growth come back, right? So there are a lot of aspects that you need to consider. Some of them company specific, a lot of them macroeconomic, right? So yeah, we invest based on a lot of different factors. Yeah. If there are any further questions, please don't hesitate to put them in the chat. Okay, which is the next HDFC Bank? Well, HDFC Bank is the next HDFC Bank. It's very difficult to um, um, how it's very difficult to like sort of predict. And there's a lot of pressure when you're comparing something with HDFC Bank is now one of the largest banks in the world, right? After the merger. I read somewhere we see like based on book size, it's very high up in the top 10 in the world, right? So it's very difficult to predict which bank is going to go to that size. But um, like the question of the next HDFC Bank um, would only come when HDFC Bank is, not HDFC Bank anymore, right? And HDFC Bank is still HDFC Bank, and we expect it to be at this level um, for a lot of years to come. There is no problem with the bank; everything is clean, right? Um, so yeah, and our views on small finance banks and growing banks, we are a little bit cautious, right? Because you'll always have some teething problems with, when it comes to growth of, smaller banks. But yeah, so smaller banks like IDFC and other small finance banks, we are a little bit cautious, but it's interesting to see. It'll be interesting to see how they're playing the cycle and yeah, how do we see HDFC Bank after its merger? Yeah, so like I mentioned, it's we are very comfortable with the bank, and right now it's one of the largest banks in the world, right? Clean asset books, good corporate governance. So yeah, we are pretty positive on. Okay, gold loan book prospects for banks. So yes, we have seen the gold loan book for banks grow about, I think it was about 15% last year. What made banks look at it now? Why not till now? We expect that it's mostly a play in demand, right? You saw gold price going up and you saw the demand for gold loans also go up, right? So this is what we expect. Also, the bank's cost of funding has come down, right? And yeah, so that's another thing that has changed. But yeah, so that's our this thing on gold loans for now. Okay, can you explain margin of safety? Okay, so margin of safety is basically think of it as sort of like a price at which you don't have much to lose, right? So if say company X has gone up 50%, right, from what you think the fair value is, there's not much margin of safety, because when you buy it at that higher price, right, the chance of it going back down or correcting a little bit is higher, because the market's perception of fair value, right, is lower now than the current price of company X, which has gone up 50%, right? Whereas when the price hasn't moved that much, or the price has gone down from what you expect the fair value of the company is, then you have a higher margin of safety, right? Because basically the thought process is, okay, this has gone down 20%. How much further can it go down? That is the question you ask when you try to judge margin of safety. Kotak Bank is in the same range for a long time now, sort of a time correction, maybe. We're expecting the demerger of businesses from Kotak Bank, like securities. Okay, so you are correct. You know, it has been in the same, sort of range. But again, valuations have been high, right? And that could also be one of the aspects of why the bank is in sort of a similar price range. And the book size of the bank has slowed down in terms of growth a little bit, for at least when compared to peers, right? So that could also be one aspect. With our expectation of a demerger, probably not anytime soon. There's that is something that we can track, right? And yeah, but we are still positive on the bank as such. It's one of the largest banks in the country, right? And we are seeing like a few green shoots as well when it comes to Kotak. Any further questions? Okay, so I've added our contact details. If there are, like further questions, or you want to discuss on Sphere, or anything related to the PMS or the mutual funds, right? Please feel free to contact us. There's the phone number, there's the email ID, and there's also our website. Yeah. And if there are any further questions now, you can definitely put them in the chat, and I can answer. Thank you, Mr. Gopinath. Thank you, Mr. Ravi. Yeah, so our phone number and email, they're on the screen as well as on the chat. Thank you, sir. Okay, so if there are no further questions, we can end the session here. Um, Thank you so much for joining us. It was great interacting with everyone. And yeah, if you have anything further to discuss, any further questions, please feel free to get in touch with us. And me or any of my team would get back to you. And yeah, we can discuss further.